Hello, everyone. My name is Murad Ahmed. I'm the sports editor for the Financial Times and the editor of FT Scoreboard, our new newsletter and vertical Getting Inside the Business of Sport, which launches on June 6th. Thank you for joining us for the KPMG Football Benchmark Forum. I'm delighted to join us. A little bit of housekeeping. First of all, please mute your lines and keep your videos function off. I'm sure in these unusual times, all of us have been on a lot of video calls lately, and it causes an echo, as you could imagine. This will allow us to keep the conversation on the findings and the report. So thank you so much for joining us and keeping to these rules. Usually we'd be all gathered together enjoying the climax of the football season, but it's been an extraordinary period, and we are looking for answers and looking for guidance about what the future holds, and that's why this event is more relevant than ever. So first of all, I'm going to introduce Andrea Sartori, KPMG's Global Head of Sports, who's going to run us through his findings on football club valuations across Europe. Then we're going to be joined by an expert panel from across the industry who's going to discuss those findings and hopefully the future of football. There will be some space and time to ask questions. To do so, use the chat function that you'll find, the little dialogue box, and write your questions in, and I'll try my best to moderate those questions and pass them on to the panel when the time is right, when the Q&A begins. But first of all, Andrea.
Good morning, everyone. Good morning, Murad. Thank you for the introduction. Let me first give you a little bit of a bad news, as our valuation report is presenting value as at 1st of January 2020. But unfortunately, we don't have yet the financial statement that will be published later this year to make a detailed forecast of what will be the impact of COVID. The good news, I think that our panel expert will be able to address what could be the potential impact, and I would be more than happy to answer any question in relationship to this matter. Let me start with a presentation of about 15 minutes on the key findings of our European elite study. I'm assuming you can all see the presentation that I've just shared. So I'm going to start giving you a very brief introduction to the report and a little bit of background on the way we actually determine the enterprise value. So first of all, what is actually enterprise value? Enterprise value is the sum of the shareholder equity plus debt, less cash and any cash equivalent item. Basically, the enterprise value tells us how much a company is worthy independently from its capital structure necessary to finance its operating activities. The beauty of enterprise value is that it allows a much easier comparability of the value of different companies, and in this case, football clubs. We use the revenue multiple approach to determine the enterprise value, but the revenue multiple approach, first of all, is very, very simplistic, and it has too many limitations because it does not take into account the asset position of a club, so how strong is the balance sheet. It doesn't take into account any profitability dimension. It doesn't take into account the future prospect of growth, for example, of a company. So what KPMG has done is developing a sort of an ad hoc multiple adjusted and determined for every single club, which takes into account the profitability dimension of the club, the strength of his balance sheet, particularly looking at the squad value which basically also express the chances of being more successful on pitch. We look at whether or not a club owns or does not own a stadium. We look at the strength of the brand, looking at the popularity expressed through the number of social media followers and the level of engagement. And then we look at the specific market conditions, especially from a broadcasting perspective. So every single club has a unique revenue multiple, and I wish to underline that we always consider the last two financial statements with different weight of different parameters in order to reach the estimation of the enterprise value of each club. How do we actually select those top 32 clubs? So the selection criteria are basically three. First of all, we need to have access to the financial statement. For example, not all German clubs are publishing their financial statement. Then a club has to be both in the top 50 by revenue and in the top 50 by UEFA coefficient. A club could still qualify to be part of the ranking if it is amongst the top 30 by social media followers. Basically, we are looking at clubs that are successful on pitch and very unlikely to be relegated, and also clubs with a very, very strong brand. 38 clubs in Europe this year were eligible, so they were meeting these criteria, and of course we select the first 32. These are the clubs that are part of this year report. You will see them in more details a bit later in this presentation. And we are welcoming back FC Porto from Portugal and Valencia from Spain. And we are saying goodbye, at least for this year, to Monaco in France and to Celtic, who was present for the first time last year. So let's start now to look at some of the key findings in terms of valuation of the top club. But first of all, let's have a look at the industry as a whole. So if we look at the evolution of the enterprise value along the 5 editions of our report, we move from a valuation of 26 billion in the year 2016 to approximately 40 billion by the year 2020, so the report that we have just issued this morning. A couple of points I think are very, very relevant. The growth over these 4 years has been impressive, with a 51% growth. Revenue were growing by 44%. And amongst these, I have to say that broadcasting revenue were growing by 65%. If we put in the context of other sectors of the economy in Europe, the growth of the 50 largest European companies within the same time frame, it was only 13%. This is to show how the football industry has been growing significantly faster than the overall economy, at least at the very, very top end of the market. Another interesting finding is, and this has been the same since the very, very first edition, is there is a very strong concentration of value at the top end of the market, so a strong polarization. Because the top 3 clubs also this year, they make 25% of the total enterprise value. The top 10 are making approximately 2/3 of the overall value of 40 billion. And the last 12 clubs, they only make approximately 12%. So it means that 12 clubs have an average value of 1% of 40 billion, which is actually 400 million euro. If we look at the evolution of the participant and we look at the market share of the different leagues, we can say that, of course, the big 5 are dominating. The English Premier League is by far the strongest league and the most represented league. They had 7 clubs in the year 2016. They now have 9 clubs, like it happened already since the 2018 edition. Spain moved from 5 clubs to 7 clubs, and it has a market share of 23%. I forgot to say that the English Premier League moved down from a 43% market share of last year with the same number of clubs down to 41. Germany has always been represented by 3 clubs, Bayern Munich, Schalke, and Borussia Dortmund. And although it only has 3 clubs, it's still in 3rd position in this ranking when we look at the aggregated value by club. Italy had 7 clubs in the first year, and it moved down then to 6, but it has basically a value that is half of the 3 German clubs that are actually represented here. You can see the other league, and one comment is that 26 of the top 32 clubs are still the same one as in our first evaluation report. And of course, the other important observation is that the non-Big 5 leagues, so representing this year by the Netherlands, Turkey, and Portugal, with a total of 5 clubs, they make a little bit less than 5% of the total enterprise value. So let's now look at the winning bus and who is actually sitting at the top this year. The order of the top 2 has not changed. In fact, Real Madrid and Manchester United are still at the very, very top with almost 3.5 billion for Real Madrid. Manchester United is 3.3 for 2. And in 3rd position, we have Barcelona, which has overtaken Bayern Munich, which was in 3rd position last year. I think a very interesting point is that for the very first time, all the top 3 clubs are now worthy more than 3 billion. In our first edition in 2016, both Real Madrid and Manchester United were closer to the 3 billion, but they did not overtake that amount. If we look at the enterprise value growth of the 3 clubs, it's varying between 15% of Manchester United up to 20% of Real Madrid. And differently from many other clubs, the operating revenue of this club has been growing faster than the enterprise value. It's not the case for many of the other clubs in the top 10, and you can actually see in this ranking. So these are the top 10, and I'm not going to focus so much at the moment on the year-on-year growth and the 4-year growth, because we will see a little bit later in the position, but I rather focus on the movement that we have seen in the ranking. So first of all, as I said, Barcelona overtook Bayern Munich. Liverpool has done an impressive jump of 2 spots, overtaking both Chelsea and Manchester City, with a very impressive growth over the 4-year period, but also as an annual growth. Arsenal has moved down to the 10th position. I think it's very important to mention that Arsenal in our first edition was actually in fifth position. Tottenham is progressing strongly. PSG is back in the top 10. It was 11th in the past 3 editions. It was 10th in the 2016. And for the very, very first time, we don't have anymore an Italian club in the top 10. Juventus was always part of this top 10 list, but is now in 11th position. I think an interesting point is to notice that the gap between the very top end and the rest of the top 10 is basically decreasing. In fact, if we just look the gap between the first and the 10th in 2016, it was approximately 2.1 billion euro, while at the moment the gap is 1.6 billion. So somehow there has been a sort of narrowing of this gap, or we can say that the top 2-3 clubs have been growing not as fast as the other club. Among these, certainly I would mention clubs like Liverpool, Tottenham, and PSG. These are some of the parameters that characterize the top 10, but it's a lot of value of a football club or its popularity. In fact, you can actually see that at the very, very top, the ranking remain exactly the same, although Barcelona goes ahead of Manchester United. But there are 2 big jumps. There is Juventus, which goes in fourth position from the 11th position by enterprise value, and this is certainly an effect of Cristiano Ronaldo, as well as PSG, which is also moving up significantly in the ranking. That's all to basically give you a little bit of background of the movement in the top 10. Let me return to the presentation, and basically you can see how the growth of the top 10 has changed over the 4-year period. And what you can see in this slide is, again, that at the very top end of the market, the growth has been significantly less than what happened after the 4th position. This is actually Bayern Munich. So we can see some very spectacular growth of some clubs. So Liverpool growing in 4 years by 109%, PSG by 158%, Tottenham by 127%, and the club that has grown the least amongst the top 10 is actually Arsenal, which again moved from the 5th position in 2016 now down to the 10th position. This is actually the ranking of the top 32 clubs. I will give you a little bit of time to look at it, especially focus on the right side of the table, because I think most of the information on the left you have actually seen. Some important mention. I would say one of the in a way most disappointing results is actually AC Milan. A very prestigious club, which you might have spotted when I was showing the social media numbers, which move from the 15th position in the year 2016 down to 22nd position, with a year-on-year increase of -5%. Everton has also lost several positions, I think 5 since the 2016 position. Benfica has been growing quite fast in the last couple of years, and a special mention has to go also to Galatasaray, that this year has been the club who has grown the most year on year with a growth of 49%, followed then by Paris Saint-Germain 45% and Inter Milan 42%. I'm going to close just showing the 5-year evolution of value, who has grown the most and who has grown the least. So let's focus first on the left-hand side, and let me start first with the absolute growth, which you can see at the bottom left of this page. So the highest absolute growth has been realized by Liverpool, which grew by almost 1.4 billion euro over the 4-year period under review, so 109%. And I also want to underline that for all English clubs, we should not forget that they have been penalized by the devaluation of the British pound over recent years. So in a way, the results of English clubs, when converted into pounds, they are actually better. The club who has grown the most is actually Olympique Lyonnais, which has almost doubled its value during the 5 editions of our report. This is somehow a result of the construction of their new beautiful stadium, which is also the case of Tottenham Hotspur, as well as a very successful player trading activity. Tottenham realized the second highest growth in absolute term, 1.266 billion euro with 158%. And the results are very, very much driven by an impressive control of their cost. I'm just jumping back just to show that the staff to cost revenue of Tottenham is 39%. I'm not so sure there is any club in Europe, certainly not amongst the top 32, that has actually such a control on the staff cost to revenue ratio. Inter has also showcased a very impressive growth since the new shareholder took over the Suning group, and of course PSG and Liverpool, which I've already mentioned. Looking at the right-hand side, the sad news is especially for AC Milan. So AC Milan is the only club out of the 32 clubs that we have covered in this year report that has decreased its enterprise value by approximately 20 million euro, or a 3% decrease. The other clubs are clubs that have not grown as fast, and in fact you can actually see two clubs that are part of the top three, Barcelona and Manchester United, which respectively go by 16 and 15%. And Arsenal, I have already mentioned. Of course, Arsenal is probably paying the limited sporting success of recent years. The profitability have also significantly deteriorated, like it has been, especially in the last financial year for Everton. So this is a summary of the finding. And now, Murad, I'm returning the word to you. Thank you very much.
Thanks very much, Andrea. That was fascinating stuff as ever. Andrea, I have a very quick question for you, because I'm sure a lot of people will be asking this. You said early on that it's going to be hard to assess the COVID impact on values. Is there any early estimates that you can help us with, provide on what it might look like next year?
Well, I was expecting this question. It's absolutely a fair question, because of course so many things has happened since 1st of January and today. I'm going to answer basically looking at your question from two perspectives. The first one, I would look at the share price of Manchester United and Juventus, which are two clubs where there is a good volume of trade of their shares. Those are liquid stock, and if you look at the valuation of the share price, it has been between 20 and 25% when compared to the beginning of the year. That's one way of looking at it. If you look at the squad value, I'm showing actually this correlation that exists between squad value and enterprise value. So squad value is on the left side, and enterprise value is, sorry, it's on the horizontal side. We published a study a few weeks ago at the beginning of May, in which we basically calculated that the devaluation of the squad value of clubs playing in the top European leagues, it would be 27-28% in case of cancellation of the league, and it would be approximately 17% in case of continuation of those leagues. So again, this range of 20-25% is coming back. And I would estimate that this is going to be the overall effect on the football industry. Of course, then the situation has to be looked, Murad, club by club. So clubs that have a very strong balance sheet, that are less dependent on player trading, that do not have liquidity issue, will basically face the crisis in a much better way in comparison to clubs that have a high level of debt, are dependent on player trading. And for those clubs, I would expect a devaluation reaching up to maybe 30%. But if you put in the context of other industry, for example, if you look at the automotive industry, you look at the banking sector, not to talk about airlines and tourism companies, this is still much less than the devaluation that these enterprises have actually experienced.
Okay. All right. Well, we will find out over the coming months what the true impact is, but those are big figures. We're going to move on now to our panel discussion to discuss these themes and more. So can I introduce to you Charlie Marshall, Chief Executive of the European Club Association. Hi, Charlie.
Hi, Murad. Hi, Andrea.
Hi.
Jacco Swart, the Managing Director of European Leagues. Jacco, you've joined us. Thank you. Jonas Baer-Hoffmann, the General Secretary of FIFPRO, representing football players worldwide.
Hi, everybody.
Hi, Jonas. and Luis Vicente, Chief Executive of 11 Sports, the sports and online broadcaster.
Hi, Murad. Hi, Andrea. Hi, everyone. Hi,
Luis.
Jonas, Jacco, Charlie. Good morning.
Thanks.
Good morning.
Well, we're going to see how this works with all of us talking. Just a reminder, if you could all keep your line on mute unless you are answering a question. But I'm going to start. I mean, that was a really fascinating presentation and discussion from Andrea. Charlie, you first. What are you? I'm going to ask all of you your reaction, but to that, Charlie, what your initial thoughts and reactions to Andrea's findings?
Yeah, sure. Yeah, so thanks again, and thanks especially to Andrea and KPMG for the presentation and for the great work you guys do in the sector. And I guess also congratulations to the winners. Given that there's not much winning going on the pitch right now, we should take this opportunity to celebrate a little bit of competitive dynamics. So, both the sort of three on the winning bus, but also honourable mentions for sure to the likes of Lyon and Spurs and Inter, Liverpool, PSG. There's quite a lot of dynamism actually, even within the top tier, which you don't get in other industries. So it was really fascinating to go through it. I'm sure we'll get on to some discussions about the world we currently find ourselves in, but maybe just to dwell a little bit on the nature of the presentation and the elite clubs in particular. What I guess I took out of it is, the fundamentals, certainly at the time of your work, Andrea, point to a very fast growing and very sort of successful elite at the top of this industry. But I'm always struck by how if you even put together all of those household names, you still end up with quite a small, medium-sized industry sector. A valuation of 40 billion at enterprise value is less than, fairly medium-sized, if successful companies. Uber, for example. Uber is sort of 10% more in terms of enterprise valuation than those clubs put together. Same with Activision Blizzard, one of the world's largest gaming companies, admittedly. But we're talking about the top tier of football. So it always strikes me that this is not a huge industry, and maybe it's because the sort of fragmentation, even amongst the elite, is a necessity of football and of sport. It is fragmented by design. It has to be. But that fragmentation then creates industrial trends which are quite difficult to manage. We have a system in place. It's a virtuous cycle where the top feeds the bottom and the bottom feeds the top. This is very important for the ongoing sustainability and the global popularity of our sport, but it makes for a very fragile system. And so I guess, even when we're celebrating the elite, even when we're looking at that very top of the pyramid, it still strikes me that there is sort of there is, even though success and growing, there's still fragility in the model. And I'll pause there because I can see where that will lead in terms of our discussion. But those were, I guess, my initial reactions, Murad.
Yeah, I agree. Working at the FT, I have to always say that even though it's a relatively small industry in comparison to global industries, it has huge cultural impact.
Right.
And people care at a huge level, much more than some other industries, and that's why there's so much focus on it. Jacco, your thoughts and comments?
Yes, thank you. First of all, congratulations to you, Andrea, and your team for this report. Very interesting. What crossed my mind listening to your presentation? A couple of things. If you look to the reasons you gave why clubs are successful, also in this, let's say, elite overview, and why they are not. You mentioned things like being successful in player trading, stadium infrastructural development, cost control, and I would definitely like to add to this that sporting success, from my point of view, both domestically as well as internationally is an important part of being successful and raising into the list, the ranking of these elite clubs as well. What also crossed my mind that if you look at the enterprise values of this list of 32 clubs, that it even shows a great disparity between, let's say, the top 4 or 5 clubs in this ranking and all the ones. Am I making this noise? Oh, okay. All the top 5 clubs, let's say, with their enterprise values, and the bottom 5 of the even these 32 elite clubs. And I think it's interesting to discuss this later. I was especially thrilled by what you mentioned about the wage ratio of Tottenham Hotspurs, 39%. And you said this is unbelievable. Maybe it is because they are, let's say, building their squad, they are building their club, and now by entering the new stadium 1.5 years ago, more or less. But let's see. Hopefully, this is a good sign for, let's say, the new normal we are facing after the crisis. So I think it's a very interesting report. And a very good start. And of course, let me conclude by saying, and this is in fact the first question asked to you by Murad, I'm already curious about the next edition of this report, because then we will see the first effects of the current situation we are facing in the world, and also especially in the world of football.
Maybe can I comment on that, Murad, quickly? Yeah, I think, thank you, first of all, to both Charlie and yourself for the compliments on the report. I think we will only be able to assess the impact in the moment we will have access to the financial statements. However, I'm afraid that the impact will also drag in the next football season. So just looking at the financial statement at 30 June 2020, it won't be actually necessary, would not actually be sufficient to establish the full extent of the impact of COVID. And one point that I would like to make is, if you look at the 2 clubs that have grown the most over the past 4 years, which are Olympique Lyonnais and Tottenham, both of them, they've actually developed a new stadium, which again reiterates what you were saying, Jacco, of the importance of developing sporting infrastructure. I would also add training center, the development of good academies, together with the cost control that you were actually mentioning.
Absolutely. To bring in Jonas, from the players' perspective, I mean, you represent players across Europe at every level, elite to low leagues and smaller clubs. What's your response to the report's findings?
Yeah, first of all, of course, like everybody else, thanks for having me on, and thanks for the work. One thing that we find in general, also because of course we work in a lot of very small markets in and outside of Europe, and we work in the women's game a lot, is that actually access to data, which sometimes is only constructed through reports like this, is essential to actually understand the business. So any kinds of these contributions that are made are really valuable, I think, for industry stakeholders to understand what we're dealing with on this macroeconomic level. As you allude to, I mean, obviously for us, this is a very small part of the picture that we are invested in, because it focuses on 32 clubs, the biggest ones, which are, of course, great indicators for a part of the industry's development. But if we look globally at all our members and where they play, of course, the picture is much more dire. Charlie and Jacco mentioned already a few of the obvious things from looking at these statistics. A few things that popped into my mind are obviously how accustomed we have gotten to growth. I think that's a very interesting one, and it is one that also bites us a little bit right now. We were not affected by the past financial crises, and we haven't probably learned the same lessons that other businesses might have from these crises. So we're, I think, a little bit less prepared in that sense. But then, of course, as Jacco mentioned, the scissor, right? I mean, even amongst this level, the scissor is still very wide. And it then obviously reflects into competitiveness questions. And What I think is important to discuss for the future is, if we talk about competitiveness amongst clubs, well, amongst whom? How do we categorize those clubs that actually need to be competitive with each other? And the multi-layer setup that we have in European football or in global football, which is very different from the US context, for example, that we want to be competitive on two levels, domestic and international, obviously is a huge trigger why we have the imbalances in many of the domestic leagues. So I think that's something that's important to discuss. How do we create more equity, more equality amongst the ownership of the value of this industry, and how do we respond to it? Clearly, the first point that will probably come out now in the discussion, the reference from Jacco on wage revenue shares. I guess that number of Tottenham is a little bit skewed based on these recent developments, but I think it is an important consideration, because we can, of course, talk at the moment a lot about expenditure and we can talk about income, but they're obviously connected. And there's a philosophical question of whether we try to create balance and competitiveness through a more equal access to resources or through restrictive measures. And historically, football has mainly done the latter, and has done much worse than US sports, for example, when it comes to the first. And I think that's an important conversation to have. Because, of course, for most players around the world, a wage revenue ratio of 39% in their clubs would simply mean that they can't be professionals any longer, because their salaries are already so low that they would drop under a certain bar. So that, I think, shows the complexity of the debate that the industry stakeholders need to have, and which these kinds of numbers trigger. But looking forward to discussing all of this.
Absolutely, Jonas. Like you say, this report is focused on the elite, but lower down, money is tight amongst clubs, and players are living hand to mouth. So it's an important discussion to have. Luis, from the broadcaster's perspective, what's your reaction?
Well, good morning, everyone, and thank you for having me here today. Starting by saying many congratulations to Andrea and his team, which I've been following for many years. It's great work of bringing some data-centric perspective into the industry, which is fundamentally important. I still remember the days where basically there was absolutely nothing out there about football as a business, and because I'll say that football for me is probably the biggest religion in the world, because it's probably represents the biggest community out there, but probably has never been probably very efficient as a business. As already Charlie said very well, it's fragmented by design, and of course we know the rivalries and the intensity of rivalries between players, between clubs, created that. But also I think the business, once and for all, needs probably a bigger aggregation of interests and needs to be repositioned in a certain way. I'll say I'm a little bit outnumbered today, because again I represent today the broadcasters. Of course, we are probably the only entity today seated here that don't have an association, so maybe we need to start looking at one. But I'll say that very interesting, some assessments that we take from this year's KPMG report. Of course, despite the great work of my colleagues in the panel today and their respective associations, there's still a lot of work to do in terms of reducing the imbalance in the industry. Of course, we are looking at the premium part of it, the biggest clubs in the world, the ones that command the biggest fees, the ones that actually can build the biggest squads, the one that actually have probably more opportunities than others to win the big trophies and to basically be out there and be a consolidated product. But still, inequality and imbalance is still a problem. Again, I'll say that being very, very supportive of the work that both Charlie, Jacco, and Jonas have been doing, because it's not easy to try to reduce this and try to create basically a much foreseeable and sustainable scenario in the future, despite all the current great work of the governance. But I'll say that one point that for me is a dangerous piece. Of course, in football, it's almost the mandatory cost base, which of course, as we all know, is basically represented a lot by the staff contracts, where we know that the players represent quite a substantial part. Which of course, when you have almost a mandatory cost base, you need to keep basically the revenue at a certain level. and you need, of course, every period of time, and that's why basically always have this interesting media rights cycles where basically there is or has been historically an influx of additional money into the football business. That's quite a very important point, to sustain the industry and to keep it growing. Of course, then the problem is the industry really reinvesting that money efficiently in terms of building a more robust ecosystem, right? My opinion is probably could be improved if actually everyone works together, right? Which, as we know, and going back to the point that Charlie said, and I repeat, is not easy sometimes to get a single view in this industry, because there is lots of egos, lots of rivalries, and that's the nature of it. But I'll say that from a media company point of view, we also need once and for all to look at we are one of what I call the seven magnificent, because I'll say that there is seven stakeholders into this business, which four are represented here today. We'll have, of course, federations, leagues, clubs, the players, and we have, of course, media companies. We have the commercial entities like sponsors, and we should have the fans, right? Because at the end, they also, are very important for this industry, because they sit on what it is a very important ecosystem, wherever it is also servicing, revenue, return on investment for media companies, but also, supplying, to the clubs and leagues a substantial part of revenue, which is coming from ticketing, hospitality, etc. And I'll say that there is a 8-1 that maybe one day can be part of this seven group, which is basically, the companies are exploring as well a new revenue stream for clubs and leagues, which is basically the off-season tournaments, which also now under COVID are under a very limited restriction, which also will cause, for instance, an impact. But I'll say that the panorama at the moment is not positive. Of course, I think it's very positive that the industry is working together to look at these problems, not just now, but also with a long form or a long view insight, because there will be, of course, consequences going forward, medium, long term. And I think we need to continue working together and trying to find, how this is going to look like in the best, more efficient way, more sustainable way in the future.
Luis, as you're outnumbered, as you say, and representing your organisation alone, I may ask the first question to you, because I'd like to throw the conversation forward. We all know that, as the report really clearly shows, there's been quite a lot of growth at the top of the game, even more growth at the uber elite as well. One of the strong reasons for that has been the rise or the value of broadcasting rights. I mean, that's the primary reason for that at the top of the game. Given the COVID impact, given that you were an example of one of the new players into the market, helping to generate even more competitive dynamics for media rights, can that be sustained post the crisis, or are we looking at a very different landscape?
Well, I think we're definitely looking at a different landscape. I don't think it's sustainable, for smaller players like us or bigger players than us, in the media industry, to keep sustaining, let's say, almost a one-sided model where we take a massive risk. Again, before COVID, there was already a lot of cases of many companies that were not getting the return on investment, and this is not, let's say, the fault of the leagues or the clubs or the players. It's basically comes from also some challenges in the industry. Again, I'll say that probably the biggest challenge to traditional media companies has been, of course, the advent of digital and the big digital platforms. If you look, for instance, advertising revenue, which theoretically and historically was always a considerable part of the return on investment for media companies when they invest on sports rights, it's been very diminished, by the advent of the large digital companies in the world. Of course, there is a part that is really important in this process, that has a competitive landscape, which normally you always need, basically a minimum of two companies to bid for rights. And of course, there is always a very country-based or regional-based approach on this, which also, sometimes don't make it easy when then you need to get your return on investment. But of course, now with COVID, there is a massive issue out there, which starts by the fact that maybe subscribers today, which, as you know, is an important part of many of of our businesses today. Maybe now our customer base can no longer afford in a bigger percentage the same amount of investment, right, into seeing sports content. Maybe, and I think that's a clear already potential point of the recession that we all think is coming, that the available income on many of the households will reduce. And when people sometimes lost their job or are basically having to face now a much bigger number of strategic choices on what they do with the money, maybe they will start making a clear visibility about, okay, can I still afford my sports package, or the carrier agreement I have with the telco A or the telco B. I'll say that with 11 sports, and so again, we are a small player, but I think we brought into the business a new dynamic, which basically being agnostic and being basically managed to explore the product in many ways, working with telcos, working with free-to-air, working with cable companies, working with all the social media networks, and even exploring our own direct-to-consumer. So again, I think we'll be probably one of the most fit-to-purpose to talk today about, okay, how can you actually, go to almost the extreme potential monetization and development of the product. And we can say that, again, the situation at the moment looks frightening, right? Because again, despite we have all these number of elements out there, we are not able to at the moment understand still what is going to be the impact on the traditional revenue streams, whatever is advertising, subscription, and sub-licensing. So we at the moment, we believe that there will be a very negative impact on that. Of course, we need to find a solution because, again, this is almost like a football game, that where there is a ball and there is a ball being passed by, all of us, and trying to find, let's say, the best balance between everyone, which again, we've been all, of course, working on that, very efficiently. But I think once and for all, we need to look at the model. And it's not just now go into the leagues or to the clubs and say, look, guys, we cannot afford anymore to pay you this. It's finding actual solutions. How can we become more partners, right? And actually, how can we evolve actually into a much more wider partnership model between everyone, where basically there needs to be a take between risk and revenue, right? And risk and guarantee. Because at the end of the day, I believe that if we actually can share much more closely as partners, the business, we actually can also create much more intense, approach into other revenue streams that at the moment we're still not able to be monetized. Again, if you look at, what today, and also embedded examples from the gaming industry, what can you do with microtransactions? What you can do with micro subscriptions? What you can do with micro pay-per-view? What you can do, basically exploring data and where data becomes actually a currency. What can you do really on improving more, digital advertising perspective? But you need to have basically a new way of doing this, that we are not just, let's say, considering media companies as basically a part of the guaranteed revenue, but also we consider media companies as partners that can actually work together with everyone in the ecosystem, with all their stakeholders, to actually create a better product and create a better business model for the future.
So I think Lewis is calling for a different business model. I will press him on what that actually looks like shortly, but I wanted to draw in Charlie as well. I think the implication there is that there's just going to be a lot less money from broadcasters, at least for the time being. Is Charlie still there? Charlie's still there. How are clubs going to adapt to this new world? You're having discussions with clubs all the time. How are clubs going to adapt to a new world where there is going to be less in broadcasting rights? We already know there's going to be a lot less in ticketing income for the in the short term. What are the ways that you think clubs are going to be able to adjust?
Yeah, I think the interesting question here, particularly what COVID has thrown a light on, is what about this is unexpected in terms of the changes to the system, of which the business model is one key part, but also the sporting models and other things as well. In cycles, economic, social, even sporting, there are structural elements and then there are cyclical elements. And I actually think that a lot of what COVID has done is kind of maybe brought forward or accelerated or highlighted a lot of the trends that were already there in the first place. certainly at this level of football, at the elite level, and which, by the way, as I said earlier, that is the sort of thing that starts to feed the system. It's proved remarkably resilient through difficult times before, and I suspect that it will, at least in the kind of broadcasting sense, I would imagine at the very top it's going to prove resilient still, because it is the very definition of super premium content. It's irreplaceable content, and you will find the acquirers of that content still falling over themselves to acquire it and going to battle in ever more aggressive ways and ever more creative ways to try and become the owners of this content. I just think that is a dynamic which at this level it will take some disruption to shift. But I think, and you mentioned it just then, Murad, what we are seeing from COVID, and one of the things that is just an aberration that's come out of nowhere, that no one ever planned for or ever thought about, was the decimation of matchday income. The absolute decimation of matchday income. Who could ever have imagined a world where football from top to bottom is being played without any crowds in the stadium? I mean, despite the fact, as we saw in the numbers today, largely speaking, on a sort of proportionality basis, matchday income is becoming less important in the overall model. It's still very, very important. It's still growing, and that has been completely stripped away. When we look at the outlook for this season and next season, we've done some sort of numbers as well, and Andrea and I were talking last week, and they kind of actually align. We see through this season and next season, even in the best case scenario where all the competitions can resume, and in the not too distant future, I won't put a time limit on it, we can get fans back in the stadium. We're still looking at a 20% minimum revenue loss, from what was expected this season and next season. And in the worst case, it's going to be double that, and could even be more. But we're actually seeing that the broadcasting dynamics are very, very different from those match day dynamics. Whilst broadcasters clearly see that this is a different product to the one that they acquired and they bought, and from a contractual basis, there are discussions going on around what that means from a revenue perspective. More or less, the broadcasters want what the clubs and the rest of the industry want, which is to get up and running again, to get the product back onto the screens and into people's lives again. So your question really was, what are we going to do about it? I think the cyclical and the structural analysis is really, really important, because it then helps us to understand what we need to change about the system. And I think we do all agree that things do need to change about this system. If you have a system which is so uncertain and so fragile that when it goes into something like this, within 24 hours, it becomes an existential crisis across the whole system, something's got to change. We can't go back to a world where, when this happens again, and I do use the word when, not if, it's unthinkable, if not very, very bad practice, to have a construction of a system in an industry which is going to be this vulnerable the second time.
Just to press you on a quick point, though.
Yeah,
what does that new system look like?
Well, and this is exactly it. And this is the work that a lot of people on this call are now doing together. And one of the things I think we all said in our pieces in the report was the collaboration is absolutely key. We have a system that comprises clubs and players as the sort of core economic units of the system. Clubs are the ones that ultimately collect the revenues for the performance, and they bear the vast majority of the costs. The vast majority of those costs go to the players. And everything that sits around those units, if you like, the leagues, the structure of the leagues, the competitions, the structure of the competitions, the regulatory systems from a financial and a legal basis that facilitate either the movement of players or the registration of teams for competitions, the eligibility, or indeed, how financial control can work to provide something like competitive balance within a free market economy. All of those are effectively the system, and fundamental questions need to be asked and answered about a system where, and again, I go back to my point, there is an inherent and very, very important subsidy model in this system, which is that a small number of the units generate a vast majority of the income, and that income through various different mechanisms has to be shared across the system. Otherwise the system will shrink, and the system will ultimately potentially become much less meaningful than it is right now. But we have to know what system we are trying to shape, and that's really the question. So it is taking those units I just described, players, clubs, leagues, competition structures. What do we want those things to be in the future? And what is the design of those things put together as a system which is going to create much less vulnerability and uncertainty than we have right now? All the time, and this is my final point, keeping what is great and fundamental to not only our sport but sport in general, which is sporting risk. Sporting risk has to be at the very, very core of it. Otherwise, we don't have a product. Whatever system we put around it, we don't have a product. And that's none of this is easy. But we're not going to answer it in the next 25 minutes, unfortunately. But I think this is the way that we're all beginning to think collectively, which is a really important thing that's coming out of COVID.
Jonas, to bring you in for a second here. So just summing up from what I'm hearing, that it does look like we're going to have a new model in football. There's a discussion going on at the moment about if there's considerably less money, even over 2 seasons, even into the future, what that looks like. As has been described, the biggest cost base of clubs at the moment are players. So is a new world going to include players being on substantially less on salaries, just because of the absolute nature of money being less, or how can a more efficient system be done to allow clubs to be sustainable into the future, broadcasters to get what they think they want, but also players to be paid well and according to what they should be?
Well, let's give me an hour. Now, look, I mean, I'll try to wrap this a little bit into perspective. First of all, of course, a lot of what Charlie says is absolutely correct. And I'm actually remembering at an assembly that we did a year or so ago, where we were already forecasting that we're sort of going into that next chapter cycle of football. When you go back to the 80s, 90s competition construction, post-World War, you have these 30-year cycles of evolution, and it felt like the next one is coming. Now, little did we know that COVID would, put the accelerator on this. But I think the first starting point, what we have to bear in mind is that we have a certain proportion of revenue redistribution in the industry right now. We have an understanding of where the Scottish market sits versus the English market. And now we're talking about a potential overall decrease in investment in the industry. Now, there's an existential problem aligned with that we haven't touched upon yet. The Scottish League maybe doesn't come back until people can go back to stadia, because they have a 43% revenue share that is in Matchday income, meaning for them to come back is incredibly hard before they can put people back in the stands. Now, people in Scotland will still want to watch football, which means the money that was previously spent on broadcasting Scottish football is probably going to go somewhere else. And that, of course, could exacerbate the situation that we already have, right? So that the money that is being lost in some places is to a degree taken up by the places where there is already more cash to start with. So we could aggravate the situation that we currently have. Now, what does that mean for us, for players? Obviously, the market is changing. And obviously, that will naturally put a pressure on new contracts. It would be an illusion to think that it wouldn't. If you have a 30-40% revenue decrease across the board, contract offers will not be the same. Now, it goes a little bit back to where I started from. I think there's 2 elements that are really, really critical for us to have a conversation about. In the current period, the last 2-3 months, we've seen an fundamental difference of how the situation has been dealt with in different countries. We have the models in which, in the more advanced, democratically organized football industries, the best of stakeholder cooperation has come out, where actual collective agreements have been made, where there's been a joint understanding of managing risk, putting protocols together and all of this. We have very positive examples for that. including some of the countries where competitions have been cancelled overall, like the Netherlands. And then we have governance environments in which it is the absolute opposite. And I'm going to take a little bit outside of the scope probably of the numbers that we've talked about so far, but the Indonesian Football Association has unilaterally imposed an 80% wage cut on all players without the players ever sitting at the table. And these are players who cannot even afford probably a 30% wage cut because they're on very low income to start with. So that's the first thing. If we want to reshape the way that Charlie describes and others describing, we need to start with the process of how we deal with each other. And unless we institute a governance framework where everybody finds an appropriate space, and where, especially when you talk about labor-related matters, the players and their unions are squarely in the middle of it, in each of the countries, we're going to have a problem. I think that's an obvious conclusion. The second one is that we need to have an economic understanding on this macro level how we're going to deal with this. And I touched upon this earlier. Obviously, in some countries, wage to revenue is at a questionable level. The problem is in those countries or in those leagues where that's the case, wages are not necessarily the highest, right? So if we cut there, it probably harms the players very significantly. And it therefore harms the competitiveness because some of the players won't be able to sustain a career. These clubs become less competitive to start with. Whereas on the top end, I think we at this point have a relatively similar wage to revenue situation as you have in the collectively bargained US sports. If you deduct the other staff members of clubs, you're not so very different from the 50-50 split that you see in the US. And I think there is absolutely nothing wrong with that. I think that's, you can talk about individual salaries and then you need to have a conversation about capitalism in our society and what we invest what part of our incomes in. But I don't think it's flawed that a half of the revenue goes to those who step on the field and play. I think that's sort of every democratic process of collective bargaining has sort of led you there in the US as well as in other sports. So the question I think is more, how do we in this ecosystem, which is larger than in any other sport, and that's a big challenge, how do we create more access to resources? How do we find new redistributive models? How do we find new solidarity sharing models? How do we find mechanisms by which also a Scottish product remains sustainable when they can come back and it's not eaten up by bigger market players taking the last bit of broadcasting revenue out of the Scottish industry? And I think there we need to have a real conversation about how this can be done. And naturally, because the players' wages are in the end some kind of a reflection of the club's income, naturally there'll be a knock-on effect. Nobody will deny that. And in such a large number of countries, players are currently with their clubs negotiating how that can look. And if it's done in the right way, in a manner of collective agreement with proper representation and legal rights and all of that, that's a natural consequence of such a crisis. And it happens across industries. So that's all fine. Whereas if we still run on this old-fashioned model of an imposition of certain rules by somebody who has, let's say, very little skin in the game, personally or economically, that's a real problem. And so I think, coming back, yes, there's a lot of these conversations need to happen. I think we need the leadership now to take bigger bites than we previously dared to take from what's wrong and what's not sustainable in our model. I thought we had a very fast growth and we have very slow responses from a governance and from a regulatory response perspective. And we need to flip that around. We need to now have a little bit more of an advanced conversation. We need to dare to challenge things that are bigger than the bits and pieces we dealt with before, which includes, for example, the transfer system, right? I mean, a lot of the financial pressure comes also from the fact that players are with very, very high prices sitting on these books. They're now probably being devalued. Clubs can't sell them. They expected income from transfer sales, and all of a sudden that doesn't work any longer. We've criticized that model for a while, but we need to start rethinking that alongside other dimensions. But sorry for going on for a long while. This is happy to come back later.
Jonas, not at all. It's nature of this forum that people have there's a lack of time to interrupt in the normal ways, but we're all getting used to it. Andrea, I think you had a point that you wanted to make.
Yeah, I think I agree overall with the discussion we are having, but I think there is in a way too much criticism to the football industry when we are saying that there is such a level of concentration of power, concentration of value, polarization. But if you would do a ranking of the European banking system or the global airline system, don't you think that you would also have a very, very high concentration of banks, of airlines that are actually controlling the market? I think that we are still not accept that in the last 5 to 10 years, football has changed completely. And many of these clubs are not anymore sport clubs. They are entertainment companies with global brand exposure, and thinking that we are going to operate in the future as we were doing 20 years ago in the world of social media, in the world of digitalization, is just simply not realistic. We need to accept this. And I do agree that mechanism of redistribution of income, mechanism of solidarity has to help to create a more competitive environment. So all these arguments are absolutely fine. However, I think that the football industry has to realize that this is a very, very different world from 10 years ago. We need to make a mental switch. And saying that a lot of clubs are actually struggling, that there are financial problems, that the business model is unsustainable. You have clubs that have a staff cost to revenue that is close to 100%, and in certain cases above to that. It's very, very true, but it's also happening in other industries of the economies. And that's the point that I wanted to make.
I think, so Murad, sorry to bust the rules of video conference panels, but I think there is one important difference there, Andrea, and I've myself thought along these same lines. In normal sort of, again, free market economy-based industries like airlines and others, where you'd get natural industry concentration, there's one very important driver that contributes to that within those sectors, and that is mergers and acquisitions and industry consolidation. Yeah. That is a natural feature of the developing systemic feature, developing systemic nature of certain industries. When smaller players become unsustainable, bigger players tend to acquire them. Industries consolidate. And yet, if you transfer that to the sporting environment, where, as has been mentioned a couple of times on the call, fragmentation is part of the design. It has to be part of the design because it's part of the product. You don't have that same ability to allow pure market forces to overtake. You just don't. I mean, it's not a question of us being sort of 20 years out of date with the thinking. It's actually us understanding exactly what's really important about keeping the product as it is. Now, I'm not saying that we all need to sit here and rail against market forces. The things you describe are apparent. They're apparent, and to a large extent, they should be allowed to happen. We live in an open, liberal, largely a world, particularly when it comes to European football. So we need to let it happen, but we just need to bear in mind that question of what is the right level of fragmentation? How much vulnerability can we cope with within the system? If there's too much fragmentation, if there's too much vulnerability, then maybe we have to take some of that out somehow. And that's I think where we're getting to in terms of thinking about restoring the system.
Charlie, Murad, on this point, because I think it's fundamentally important, and I think I'm personally, and someone might disagree with me, that this issue of the merger and acquisition consolidation, it's actually seen in the merge of certain leagues. You can't compete with the big 5 leagues that are basically the big 5 European economies with strong GDP, high population. I do personally believe that looking at Europe, at certain geography of Europe, a merge of leagues and creation of regional league like a Eastern European League, a Balkan League, a Nordic League it would allow creating a bigger market where you could sell broadcasting revenue at significantly higher level and bringing back to the glory clubs that have been very prestigious. I can think of Steaua Bucharest, Red Star Zagreb, not to talk about many of the Portuguese, Dutch, Belgium clubs and Scandi Club. So I think we need in a way to support that, but I do of course realize that there are a lot of conflicts and different conflicting interests between the different parties involved. But we have to accept that football is changing.
Mm-hmm. That's a fascinating idea. I'm going to put it to Jacco from European leagues. But as I do that, to everybody else listening on the call, we're entering our Q&A section. So as some people are already doing, if you have questions that you want to ask the panelists, please write them into the chat function. But Jacco, there's a question for you in the chat. I wanted you to come in on Andrea's point. Are we going to see a new world where leagues are going to have to merge and to function to allow a new world, a new business model to emerge and help kind of solidarity between clubs across borders?
Yes, first of all, it's good that I represent an organization which is very patient, because in a panel discussion like this, you need some patience. But now that I have my moment, I will use the opportunity, and I will comment to everything I heard so far. Let me start by kicking in an open door. That of course, football, like many industries, is hit hard by the crisis. But I also want to make a big compliment to the industry we are working in, because I think it is impressive to see how football is recovering from the crisis we are facing. If you see the vitality of clubs, of leagues, and everyone involved in this industry, I think we might be a little bit proud of the industry we are all working in. In many leagues, the plans to restart and finish the competitions are very concrete. Many clubs have already found agreements with all their staffs how to reduce, let's say, the wages, not only of players, but also of management, coaching staff, and other staff members in many respects. I would say I would describe the mentality in our industry, and especially also on club level and league level, as follows. If it cannot be done as it should be, it must be done as it can in the moment. And because we are living in a situation where the greatest certainty we have today is uncertainty. And then coming to the comments made by Luis on the broadcasting rights, I read, of course, your contribution to the report with great interest, and I'm glad that you added in your contribution during the panel discussion that, let's say, competition in domestic or international markets between media partners or potential media partners led in history many times to, let's say, paying strategic bonuses to those who sell their rights. And I think that still there is a lot of competition in the markets, and whatever crisis is not going to take away this competition. So I wonder how this is going to develop in the upcoming, let's say, years or period to come. I also agree very much to what you said about that maybe this is a good moment to think about new models of working together. And there are already some good examples, I would say, of risk revenue share models between leagues or competition organizers and media partners. And what you said, let's say the new digitalization, the direct to consumer development, as well as the data embracing, as you described about. I also think, and I hope very much, that would be very valuable as well for all the leagues and all the competitions outside or besides the top 5 leagues. We don't, because they have already a very international value as well, but especially on the international market, I think maybe not in the extent we are used to for the big 5 leagues, but it will be valuable for many leagues outside the top 5. And of course, and then coming also, Charlie, to what you said, we really should not underestimate the risk of, let's say, the less attractive proposition we are forced to put into the market today. Playing football matches like we see now in the Bundesliga without fans is a totally different ball game, I would say, than playing football with fans. The appeal of football in general terms comes out of, from my point of view, at least three important factors. First of all, the unpredictability of the outcome of an individual match, the emotional charge of the matches we are organizing, and because of the atmosphere surrounding every event, every football event. And if two out of those three all of a sudden disappear because of the fact that you cannot have fans into the stadium, you have to face this, and you have to organize this. And this is also what you see happening now, because the first match rounds in the Bundesliga were without, let's say, bringing in artificial atmosphere into the matches and back to the, let's say, to the television screens of all the audiences. But now you see that they are already developing from the Bundesliga, but also all kinds of other companies who are bringing in services to try to solve as good as possible issues and questions like this. I think it is a good example of the vitality of the industry, and it's also a good example of the cooperation which is existing between leagues, between all the stakeholders within the industry. There's a great willingness to find solution. There is a great willingness to find solution on all the calendar and the regulatory related issues. And there's a great interest to share all kind of knowledge and information among stakeholders, amongst clubs, and amongst leagues, which is good, and hopefully we can continue with this. But let also not forget that we are, from my point of view, we are facing a double crisis. It's not only the crisis of the fact that our industry is affected, is stopped more or less from one on the other moment, but it's also the fact that following this crisis, we are going to have an economical crisis. We are having this, let's say, similar crisis which we had more than 10 years ago, or 2008, when the financial crisis happened. And how are we going to deal with this? So it's not only solving the COVID crisis for our industry, but also how are we going to address the economical crisis in this respect. Finally, coming back to the also to what Andrea was saying, and also a little bit to the KPMG report. The KPMG report is, from my point of view, it is showing, let's say, the tip of the iceberg. And everyone knows that the main part of the iceberg is the part below water. The main part of the iceberg is underwater. And now what is, in fact, what we can see, the entire iceberg is affected by the crisis. In fact, the iceberg is pushed into, I would say, warmer water. And what we must do is must prevent that not only, let's say, the part of the iceberg underwater would melt down or would break away from the iceberg. Because if that would happen, the ultimate effect will be that also the part which is now above water will end up underwater and will melt down away as well. And this is where I might disagree with you, Andrea, when you make your comparison with the banking industry. I think our industry is really a different industry. Football industry and football matches is existing because of strong rivalries, and strong opponents are required to create compelling competitions. And therefore, a strong competitive balance is the magic formula for this all. Thank you, Murad.
Jacco, thank you so much. You took your moment brilliantly there. I think we can all agree on that. We have a few minutes left for questions from the watching audience. So We're going to treat this as a quick fire round, 30-second answers as far as possible. But the first one's for Andrea. Do you expect some leagues to be more affected than others by COVID, and which ones? I'm pretty sure Jonas and Jacco will want to have answers to that as well.
Well, I mean, the French league has declared that it's going to be is not playing, and therefore, of course, it's going to be affected the most. And I would say that the leagues that are more dependent on match day revenue, they would be affected the most. And in terms of clubs, I think that the clubs that are highly dependent on player trading, the clubs that are having liquidity issue, they are going to be the ones that are going to suffer the most.
Jonas, I mean, you get a perspective from the players' point of view. Are there some leagues that are really going to be struggling going forward?
Well, not substantially. I'm disagreeing with anything that Andrea said. I think the main points there are correct. I think an additional challenges that we see with these return to play protocols from a medical perspective, that just logistically it is much harder for a smaller league to manage that. And of course, we have different impacts of the crisis itself, which you're seeing now. Germany has managed it differently than Italy, so they're able to bring their product back, whereas Italy hasn't. And we have now the first couple of countries in Europe which are essentially COVID-19 free, with Slovenia and Cyprus. And you already see there the difference. One of them wants to restart, the other one canceled anyways. So I think it's going to be quite a patched up landscape in terms of the impact. But I think also, let's not think that the crisis economically, that we're actually right now in the middle of it. I think we're still in the early part. Next season is going to be the most significant economic impact.
Yes.
And we're going to still have to manage a whole lot more than we so far have.
Jacco, I'm going to put that question to you, but I'm also going to paraphrase a much longer question and articulately put in the chat. Essentially, in the report, you talk about the need for a spirit of cooperation. The problem with that is that, as the report shows, that there's a big difference in the financial gap between the top and the bottom. Given that we have this disparity, how is cooperation going to be achieved?
Yes, that's a good question. We see a good cooperation now, but that's not a guarantee that will last forever. I think, and this is one of the things I also read in the report, was the comment by Gianluca Di Marcio on the transfer market, that there is, of course, a risk that the biggest clubs can, let's say, restabilize the best and the quickest out of this crisis, and that they can use that opportunity to, let's say, enlarge their position compared to the great position they already have. And I think it needs, and this is also what Jonas was saying, it needs good leadership, also on a European level, to make sure that is guided into a good direction, and that we keep the whole industry safe and healthy. And I think what we must do is to safeguard the fact that the disparity, that we seize the opportunity not to enlarge the disparity, but let's say to close the gaps there where possible.
Luis, I'm going to give you the last question, because though you spoke first, you were very patient with all of us. But I mean, the really interesting thing that you brought up is this idea of a new broadcast model, a risk share arrangement between the clubs and the leagues and the broadcasters. Could you just give us a little flavour of what you would like to see? How would that work?
Yeah, look, very quickly as well, because I don't have a lot of time. I think there is one point around the industry that, again, as much as we try to avoid it, it's there, right? Despite, there is great clubs and great leagues in this business, the industry on its own doesn't generate enough revenue to be more sustainable, right? Because, again, you need to generate definitely more revenue, more cash flow to be able to also invest better in the product. I think one point that is fundamentally important on this is, okay, how can we evolve into a model where basically you can build a better aggregation and you can build also product, which actually I'll say that, for the medium-sized leagues and the small leagues will definitely be a better solution, because today, of course, we know that they sometimes struggle, international rights, of course, the ones that have a bigger domestic market, are more safe. And the thing I'll say that today still I'll say that domestic rights will still be more protected than international rights, overall, the entire ecosystem. But I think anyway, there is a point that we are never able to extract that is, okay, what is really the size of the audience of football? Right? Because again, the model has been blurred in a way, because you have always, as a broadcaster, you have to take some decisions today. It's depending on your available resources, which are the rights that you can accommodate under your budget, right? So which means that you need to take tough decisions, right? Let's say you cannot go to all of the leagues, you cannot take all the products, and traditionally who suffer more than that is the medium and the small leagues, because you always try to go to the premium side first. I think there's definitely a business today for the second tier and third tier leagues, in the second league and third tier clubs, and because definitely there is a product today that digitally can allow you to explore, right? And that is much more a partnership than what is today already for the premium side. So I think the premium side will need as well to look at what happens underneath. Again, I'll say today we have, for instance, at 11 a great example with Serie C in Italy, which is actually a partnership, which is exploit digitally and actually has a robust product, has 82,000 subscribers, that actually have a churn rate of 0, right? So there is definitely a market out there. If we all believe that, we need to put this once and for all as a priority, not just looking at the premium side, but also looking at the other side. So, and then I think there is definitely data, again, today, the industry has a big a big unknown perspective about how many fans there is out there, how many people is willing to give time to football. Actually, how can we really once and for all monetize those relationships? That's why data is important. But for that, we need to have an aggregation of the product, not split it just in one player, but split it in many players. And also, I think as a last point, also trying to stop the temptation just to go with external investors, because definitely external investors is important on an ecosystem that doesn't generate enough revenue and enough liquidity. But, it's also important to understand the complexity of those relationships, because, it will require a business spectrum to be established. It will require, a strategy to be established collectively. And I think that more than ever is important that the full ecosystem tries to once and for all oversee where are the gaps. And I think clearly there is many gaps today that can generate much more money for the industry that we are not, any of us is at the moment collecting.
Okay. Yeah, Jonas, I think you're going to sneak in one last comment before we wrap up.
Yeah, I just wanted to come back very quickly on what Jacco said about cooperation and leadership. And I think it's not so unique what we're dealing with. The European Commission presented yesterday their plans for a European financial model to refinance certain countries who've been hit hard. And they tied many of these grants and credits to requirements on climate change commitments. So it's the same conversation here. We can purely fund where economic need is, and we just give cash and we put no conditions on it. Or we can now restructure based on certain values and certain ideals that we want to encourage. So the way that our general system right now deals with the question how we come out of this crisis is not different in essence from how football needs to look at it. We can rebuild and just say, look, survival of the fittest. Darwin will clarify who has the right to survive. Or we can say we structure this and we want to reward certain behavior and we want to conditionalize certain standards and build around that. And I think that's the leadership question that we actually have to get to, whether across the board we can find those values, we can find those principles and rebuild the model that we have in order to strengthen them. And that, in our opinion, will give you the long-term sustainability coming out of this, rather than just the survival of the fittest element that may be the natural instinct of the human mind.
Thanks, Jonas. I think I'm going to sum up because we've run over, and I'm going to let Andrea have the last word. That was a fascinating discussion. There's so much we didn't get to cover, like what the structure of European competitions are going to look like, and other really big outstanding issues that were had pre-COVID. It's clear that over the next 2 seasons we're going to see the impact of what's been going on. I think everybody's agreed on that. whether or not we're going to see things like mergers of leagues or completely different revenue models like Luis was suggesting in broadcast. It's yet to be seen, but a lot of food for thought. Thank you so much for allowing me to moderate and listen in. Andrea, final thoughts from you.
Murad, Luis, Jacco, Jonas, and Charlie, thank you very much for your contribution. I think it has been quite a fascinating discussion. I think that the next year report is going to be even more complex for us to draft, and I think our algorithm is going to be under heavy stress, because probably it has never experienced, or definitely didn't experience, such a situation. So we will have to think how to face this situation. I think it was a good debate. Thank you very much for your contribution, and hopefully we will repeat next year. And I think it has worked out pretty well in having this online meeting rather than the face-to-face that we had in the past year. Thank you, everyone, and thank you also for the attendees. Bye-bye.
Thanks all.
Bye.
Bye.
Thank you very much.
Bye.